All right, fam. Good morning. Good morning. Today is Wednesday, June the 10th, 2026. Another day in the market. Market is red. It is down today. Thanks, Lorna. Thanks, Mirza. Appreciate you both, as always, keeping us in line in all of the rooms and all the support that you both provide to us. And for those of you that are members of the Trendy and SPX family, for your support as well. We are truly appreciative of you. So, with the market opening up red, the ES futures are down 72.5 points this morning. That is a large move right on the open. And it's important to realize that while over the last, let's just look. Over the last really 1, 2, 3, 4, 5, now 6 days, the momentum has definitely been to the downside. But this is, on the big picture perspective, a pullback into nothing more than the bull channel and some higher time frame, a weekly demand zone and weekly 9 EMA. So, shorter time frame over the last 6 days, over the last week, the trajectory has been to the downside, but bigger picture time frame, this is still a bullish market. It is a bullish market all the way down to 71.4367. And then really it is still bullish unless the 618 of this, remember that 9-week rally? Of that 9-week rally is broken. Well, that level is about 500 points lower than what we are right now on the S&P 500. I have to remind myself to keep the right perspective. Now, does that mean that I won't trade the downside for like a, shorter term swing type trade, maybe out a week or two if given a big rally up into supply? Yeah, I'd probably trade it now. But it also means that I am actively looking for signs that the selling is exhausting so that I can get some of the names that I've been watching on sell. All right. All right. On the weekly chart for the ES, you have a initial candle, an inside candle, followed by an up candle. The move up was 2 weeks long and it was not a huge, impressive move to the upside, but nonetheless, it was a pause and then a continuation move to the upside where we created new all-time highs last week. And now price has pulled back into that pause area or the consolidation on this weekly time frame. This zone, this demand zone, according to how we draw demand zones, is not broken unless this weekly candle or next week or any weekly candle closes below, let's call it 7,200. All right? That is the reality. That is the bigger time frame perspective. This week, price has pulled back into the weekly 9 EMA. Price has pulled back into the bull channel from the move the week of March 30th to the all-time high. That's where we're sitting right now at a conglomeration of technical levels that we watch for support. All right. All right. Let's look at the daily chart. I mentioned it a second here. We created inside and up candlestick structure right here. That is demand, an initial candle, an inside candle, and a move to the upside. Now, we pulled back, we came close to that demand zone. We rallied, remember, 9 days and created new all-time highs. And then for the last really 6 days, it's been more bearish than bullish for sure. And we created supply up here. We had that big imbalance candle, that big day on Friday that we closed at the bottom. All right. That created a beautiful looking supply zone here. Now, on the 8th of June, the 9th of June, you created two inside candles. And today, the 10th of June, it is creating an inside and down formation right now. But I don't know where this candle is going to close. What I do know is right here at the top of this bear channel where we wicked perfectly to today is that over under area. So notice all of the confluence there, not just the body of the inside candle, but it's also the lower weekly edge. It's also the 38.2 of this down move and monthly edge mid. All right here is some pretty stout resistance. So 74.05 all the way to 73.90. It's just 15 points, but it is a strong resistance area, and it is an area that if we were to get a bounce and I was long from this zone, I personally would be taking profits here. Okay. Then above there, the next zone that's important to me on this chart is my favorite Fibonacci zone that I trade a lot is the 50 and the 618 plus the weekly edge mid or the halfway range of last week. All of this is the next potential sell zone based on Fibonacci levels and possibly smaller time frame candlestick structure. Okay. And then above there, that beautiful supply zone. Normally I would just go with the body of the down candle, but in this case, I am anchoring the bottom of the supply to the upper monthly edge. All right. So that is the sell or the resistance areas on my chart. Then as far as demand, if this daily zone that has now been tested and yesterday we wicked all the way below it, if this zone doesn't hold, if the bottom of this daily cloud inside of this zone does not hold today, then I personally would be looking for 72.45, which is basically yesterday's low. You see these pink dots? That's a 50-day simple moving average, a level that a lot of traders use. That is the next area that I would be watching for support because it is the low from yesterday. Now, I know this structure looks like an inside and up formation, but it is not technically an inside and up. So I am just using these levels as potential support. The next demand zone was actually created back here where we had an initial candle and then one, two, three, four candle basing candles or inside candles, and then an up move that was pretty much a couple of days later tested, and we got the move up and up. All right, so the fresh demand zone on the daily chart here on ES is 71.43 by 70.75. This zone has been tested. It worked yesterday. I don't know if it's going to work again, right? I don't know. Is there still buy orders setting in here? I don't know. Nobody does. But all we can do is trade what we're seeing. And what I'm seeing right now, yes, the market is down 65 points, but the market has pulled back into demand on the weekly and on the daily. For our chart, this is multiple zones on the 4 hour, but you have an inside and up here, an inside and up here, and then inside and up right here. This 72.47 is the lower monthly edge. That's where we bounced from yesterday. We created supply back here on Monday because we had an inside and down candlestick structure. And it's beautiful because that lined up with my favorite Fibonacci zone, the 50 and the 618. So this was a beautiful rejection on Tuesday from that zone. Then we rejected and we actually rallied all the way back up to that key resistance area I was showing you on the daily. Now, overnight, this is the first overnight candle. We created an inside and down structure right here. So 73.81. And then if I use just this monthly edge mid here, 74.0537, I need to make sure that on my daily blueprint, this is an area that I treat as a potential sell zone. All right, so I am writing that down on my scratch pad because it's a 4 hour inside and down. The AC/DC bear did play out already as price flushed through these decelerator arrows. The target was the lower monthly edge. That's where price pulled back to yesterday, and that's where we bounced from. The base of these candles here, that imbalance candle right there, the lower daily edge, this is an area that you could see buyers step in. This bottoming wick shows that the buying pressure was greater than the selling pressure at that point, even with that huge trajectory down. And that bounce is a clear indication that there were definitely buy orders setting down here near 80 or 72.87. For that reason, 72.87 would be an area of support on my ES daily blueprint, and another area that I need to make sure is on my chart. Okay, so 72.87 is an area of support before the demand zone and before the lower daily edge, anywhere from 72.8750 all the way down to the demand zone. I would make it a gray zone on my chart and just an area for me to watch for a bounce. Not an area that I'm going to create a big green demand zone because I don't have the candlestick structure there, but it is an area for intraday day trading that I want to watch for a bounce because hey, you have a lower daily edge in there. All right? All right, so I have the resistance zone at 73.81, 82, right in that area, all the way to that monthly edge mid as my potential sell zone this morning right off the bat. And then I have the first potential buy zone here, and of course, demand down here at this lower monthly edge. Okay, so here is the daily blueprint. I've already went over why this zone is important to me. And then I have went over the immediate zones here. Well, this on a 4 hour. So let's change it to a 2 hour because that's what I use. All right. So this 82, that should be 82 right there. If I change or put a line, I've already showed you on the 4 hour why this is an area that I would potentially go short from. If you look at the Fibonacci's that I have drawn from the high yesterday morning to the low yesterday morning, that key 618 area that we turned down from overnight or yesterday right at the close, a very key level, right? So my first sell zone, and I'm going to go ahead and make this go all the way out, is right here. The first potential buy zone, I've already talked about why. The base of this imbalance candle plus your lower daily edge, and then the bottom of the zone or yesterday's low, that's a potential buy zone. Then I'm going to mark this first inside and down candlestick structure right there, lining up with the daily edge mid. I'm going to mark this inside and down candlestick structure. And just here in the pre-market, here is the most recent pre-market low. If I don't draw liquidity chop levels on my chart, but if I were going to, this low here and then this inside and down, that's levels that I would pay attention to for potential chop zones today. If I go ahead and put the lower time or the uh, 23.6 and 38.2 and the 50 back on this chart, you can see that anywhere from 68.5 to the monthly edge mid is that key Fibonacci level. And look how the candlestick structure is lining up with these levels. That is just confluence, and confluence from multiple technical assessment shows the potential for higher probability reactions at those areas. That's why this would be the top of what I would consider liquidity chop, and this would be the bottom because it is the pre-market low. All right. All right, above here, obviously, this is from yesterday, and that was an upper daily edge, but it is not the upper daily edge anymore. And this was or the bearish GP. Now, if I want to find the bearish GP more recent, since we did make a lower low, I need to adjust this. All right. When you make a lower low, your Fibonacci levels change. And for this zone right here, rather than just going to this 618, you see the topping wick at the monthly edge mid. That's where I'm going to mark my first potential sell zone here on a pop on ES. Okay. So yes, it is the bearish GP, but it is also using that topping wick high from Tuesday morning. All right. Then I'm going to remove these fibs just to clean it up some. I don't need it all sitting there. I have the 764 and the 887 marked. Okay. So remove this. That's going to give me two immediate sell zones this morning. It's also going to give me two immediate buy zones this morning. I have another demand zone below in the event we flush below 71.3375 today. Okay, so for now, here is the zones I personally will be focusing on this morning on the ES futures chart. Sorry, I got two lines really close to each other, so I want to remove one of them. All right. All right, let's look at the NASDAQ chart and do the same thing, top-down approach. Might have to make some adjustments on my daily blueprint. Measure in the same range, NASDAQ's come down into weekly demand. It is inside a weekly bull channel. It came down to the weekly 9 EMA, and we're getting a bounce there. No supply above on the weekly chart. Daily time frame, we again are right at daily demand. That yesterday's low came all the way down to the bottom. Please note the candlestick color is going from green to white. That's bullish to neutral candlestick color. You got the same exact scenario with the ES in that yesterday and the day before were uh, inside candles, and then today could potentially be an inside and down. You have that same exact candlestick structure. You have really the same levels that equal resistance here in the lower weekly edge now and the monthly edge mid. All right. Uh, we actually, even though this is a huge imbalance candle and there is supply here, you don't have the exact candlestick structure, but you can save yourself a lot of time and not go out hunting for it. What we're hunting for is that big imbalance candle, and it's pretty clear as day there last Friday's candle, one of the largest pullbacks I've ever witnessed in one day on the NASDAQ. There it is. All right, that's supply. There are more than likely sell orders still setting up here waiting to be filled because the move was so dramatic. Therefore, I'm just going to mark it as supply, and you will see on smaller time frames you have supply there. All right. So that's a daily chart. If we break down below yesterday's low, 28,243, and price continues down, keep an eye on the lower monthly edge and the daily 50 here at about 27,935. For our chart, this area inside and up, it clearly did not hold and we closed below it. So I can remove that from that chart. The 4-hour demand zone that worked was a tested zone. It was not the first test. We came all the way down to the bottom this time. The first test really was here and we bounced from it. Then we tested it again at the top and we bounced from it, made a new all-time high. This time, the third or fourth test, we came all the way down to the bottom and then got the rally from there. Now, this again is an imbalance candle to the downside, but you don't have the exact candlestick structure. Just know when you see an imbalance candle like that, you need to investigate it further or simply just draw your zone there and say, hey, there's sell orders that probably with that kind of move down did not have a chance to get filled, and we're going to treat it as supply. All right. We're also on this relief bounce right here, creating an inside and down on the 4-hour chart. Now you could put the line right at the down candle here at 29,07725, or you can use the edges as your sell zone right here. Now this one I'm not going to make red because the trajectory down is just bringing price right back into demand. But all the way down to yesterday's low, I would treat this as a potential buy the dip opportunity. You got the lower daily edge inside of there. Let's look at yesterday's blueprint and get an idea of the absolute perfection that was this sell zone from yesterday straight down into the buy zone. Here is that lower daily edge, the base of the candle of the up candle after we wicked down into demand on the ES chart. This is a gray zone for me using the lower daily edge and then just the top of my demand zone. I'm going to leave that there like that. Then I want you to notice the 50, the 618, the lower weekly edge, and the monthly edge mid. That is all a potential sell zone, and I am using the wick of that candle rather than just the 618 there. Draw that zone all the way across. That's going to represent a sell zone for me. Then, of course, I'm going to do just like I did on the ES chart, and I'm going to mark the top of that bear channel, and then I'm going to mark the current pre-market low. That gives me zones to go short from, zones to potentially go long from, and it gives me a trade plan for the NASDAQ chart. Now, real quick, let's look at the SPX major zones for today. Now, you're not seeing on the SPX the fact that price is currently down 58 points. Subtract 58 from here, and you're going to get 73.28. 73.28 is going to put price down inside of this daily. Well, it is on a daily chart as well, but it's going to put price inside of this demand zone, right? Or very close to it. No, that's too far down. No. I subtracted a whole 100. Sorry, guys. Woo! Okay. 73.86 minus 60 is going to equal 73.26. This is the zone that price has been at several times right here. I'll draw it out and we will make it gray today. Okay? It's got a lower daily edge in there. This is a zone that I would not treat as a set and forget zone today. This is a zone that I can trade just based off of the tested demand that we bounced from yesterday. Okay, we came all the way down to this demand zone, but we definitely did not close below, inside, and up right here. Okay, for that reason, that's going to be still a buy zone, but not one that I'm necessarily going to trade if I'm not able to sit in front of this computer and manage the trade. Now, immediate resistance on SPX, just based on the monthly range, would be this monthly edge mid buy, the lower weekly edge right here, right? You have a confluence also on the ES chart. If we were seeing overnight price action, this would be an inside and down. If price is right down here, this is inside and we would open up down. All right, so what I'm going to do is I'm just going to mark this gray zone, and notice how there's two gray zones pretty close to each other. If we see some chop in here, I wouldn't be completely surprised. This gives me a potential first sell zone, but just like the one below it, that's a buy zone. It's not a zone that I would necessarily set and forget. This zone up here was not tested, right? Has not been tested overnight. and it is an inside and down candlestick structure. It is a zone that I could, on a bounce, look to set and forget a trade. You got your upper daily edge up here, by the way, by that weekly edge mid. This gives me my first set and forget sell zone. This is the second set and forget sell zone for me. These two are not set and forget. This one is, and the one below it is. All right. Throughout the morning, I will draw Fibonacci's of current price action. And if you choose or you like to scalp type trade, and you're sitting in front of your charts, can actively manage it with me, then you're welcome to trade off of those smaller zones. If not, I'll put the set and forget ideas in the notes section in SPX as I do each morning. Now I'm going to get off of here and turn it over to Trendy John. All right, guys.
All right, guys. Thank you, Mel. We're going to go ahead and get started here. And again, happy Wednesday to everybody and happy anniversary, Mel. And I am very, 7:34 here. We got a nice little push from our liquidity chop. Hi, Mary. And hello, support here at Simpler. Thank you for being here every morning, guys. The market, what I want to show you here is on SPX. We're going to come over. We're going to share this future screen really fast. Um, this is this is rinse and repeat, man. This is the same thing every single day, in and out. It really becomes this thing where it's just so consistent that, you gotta just smile. You really do. You just gotta smile when you come in here and go, "Holy crap, man." There's not a million things coming at you. Um, There's some boxes. We talk about this all the time. There's some boxes on the screen. You look to go long at the lower ones. You look to go short, or pull some of your long trades off at the upper ones and so forth. So let's go over this, okay? And again, this is like my 15-minute, hey, this is who I am, this is what I do. Hi, everybody. I'm Trendy John. I created the Trendy methodology probably about 11 or 12 years ago. I created a company. It was called Trendy Options. I learned quickly that everybody thought only I traded trendy options, so we changed the name to Trendy Trading. That actually opened up the door to a lot more people. We started showing them not only, I say we, that was my wife and I, we showed them that we could trade futures, options, forex, equity. The whole thing, man, is this whole school. Our Discord got really, really big. I met Mel. I took a lot of interest in Mel. She became a trader with Trendy Trading. I negotiated, came here to Simpler. We negotiated for over a year, and all went well. And we have been here, Melissa and I have been here for almost 3 or just over 3 years. And I can't believe time is flying by like that. Now, in this time, um, Mel and I have just gotten better and better and better. And that's what traders should be able to do, is that we never stop growing things. We learn something every single year, and I love that. And the thing that I'm really learning here is that this process, we're just, how they say we're locking it in, we're dialing in. It's just really getting more simplified. And I'm just really happy about that. So when I tell you that we have boxes on the screen, we teach you how to find those rectangles, those supply and demand zones, those golden profit levels, the confirmation process that Mel has taught you guys. Um, all of that, all we need when we come in here is just to do a little bit of homework. Whether you do it at night or you do it when you wake up in the morning, we identify these zones and then we simply wait. We wait for price to get to those zones. But we also have a PMZ, hey, which is also a zone. And you treat everything on these screens basically like a buy and sell zone. Okay. Whether or not you want to pick it out of the money or in the money or at the money when it comes to options, that's up to you. Whether you want to trade from 1 week to 2 weeks to 6 months to 1 year, sort of like I do, is up to you. But one thing that I do want to make sure that you understand, and I will read this out for, the SPX room. You might have not heard this because I only sent it out in the trendy room. I said, thoughts as we end the day, are you a day trader or a swing trader? Understand the difference and align your expectations and patience. What do I mean? If you're a day trader, your job is to extract a piece of the move. You don't need the entire trend. You don't need to catch the exact top or bottom. Your goal is to execute your plan, manage your risk, and go home flat. Now, what that means to me is within 30 to 90 minutes, you're pretty much done. You know, I would be shocked if our levels and or the PMZ doesn't give you an opportunity to take that chance every single day. I can't guarantee you're going to make money, but I do guarantee that we're going to have some sort of setup. Okay. If you're a swing trader, your job is completely different. You are intentionally trying to capture a larger move that may take days, weeks, months, maybe even a year. That requires a lot of patience, okay? It requires accepting pullbacks and allowing the trade time to work. And, that can also be applied to scalp trading and intraday trading. It's just that it's a matter of seconds and or minutes where that patience really matters. The biggest mistake I see traders making is acting like a day trader when entering a trade and then suddenly becoming a swing trader when it goes against them. Or worse, they enter a swing trade and manage it like a nervous day trader, taking profits at the first sign of green. I think we all struggle with that. Your expectations must match your time frame. That is a big thing here in the trendy room. That's why these zones are color coordinated and so forth, so that you understand, okay, what your expectations are from taking these levels. A day trader needs precision. I think you guys would agree with that. A swing trader needs patience. I don't care about precision. I really don't when it comes to swing trading. I just need to be within a playing field of a level, and I'm going to start my position and so forth. Neither is better than the other. Just like aggressive versus conservative, actually, neither one is better. I promise you that. You will make just as much money trading aggressive as you will conservative. Sometimes it will work, sometimes it won't. The problem starts when you don't know which one you're going to do and you're flip flopping. So it's very important that everybody, at least, as I told Mel when I first met her, is take at least 30 days and do the same thing in and out. Then make sure you're journaling, make sure you're taking those notes, come back, read those notes, and find out where you can improve. Before every trade, guys, ask yourself, am I trading for today's move or am I trading for the next several days? Once you answer that question, the management of the trade becomes much more easier. And for me, a lot of times what that means is I truly live my life between the stop and the target. Even if it's a scalp trade, right? You guys know I'll mess around with some flight simulator. And matter of fact, I haven't really been flying it much lately, but that's what I like to do. So if I'm trading a PMZ or I'm trading some of these colored zones that you guys are seeing on the chart, it's really just me doing something to keep my mind off of that and allowing the trade to kind of work out, if you will. All right. On today, I'm starting out once again on the daily zones. Now, the 4 hours are a really good one as well. But I have the dailies on right now because what I'm noticing is we're getting some pretty wide swings. And just like yesterday, this is our lower zone from a daily. This is our upper zone from the daily. And this right here is going to be your golden pocket. And down here, this is the same thing on the ES futures. This is the same thing up here. This is your supply zone, and this is your golden pocket here. Okay, really straightforward. In the middle, I have Mel's confirmation without using zones. So this is basically not sporadic. It's going to fire long, short. It doesn't care about zones. It's just telling me when we have the confirmation set up. Okay. So you'll notice on this particular one, there's no targets to the upside either. I have that turned off. All I care about at this point is my risk. Okay. So this one had fired. And for anybody who's actually watching the beta indicator, just to be very clear, sometimes you won't see the long setup because it's looking back so many bars. If so many bars haven't happened, it's not going to fire off the next I guess, entry, if that makes sense, because not enough bars have happened. And that just reduces the number of entries, if you will. Okay. So that's all that's happening there. I think most of us understand if you've taken Mel's class or you've even listened to her, she's given away several times how she looks for this. Then you know that right here we made some higher lows, we jumped over the body, and you could have went long here, and then you could have trimmed in here. Okay. Now, my goal every single morning is to again make my money within 30 to 90 minutes within intraday, and everything that's unrealized that has a lot of time on the books. I then look over here and I say, hey, is there anything that I can add to? Whether it's shares, whether it's like leap trades, longer term swing trades. I do that after the market's moved about 30 minutes to an hour, typically an hour. Going to wait about an hour, if not longer, and then assess the market and go, hey, I'm going to look at weekly, monthly, and quarterly charts and then go, okay, do I really want to do anything here? Okay. Now, Mel did a really good job going over the blueprints and so forth. I haven't changed anything. I have a bearish GP up here. I have a supply zone. I have a tested zone that worked really, really well back here in May. And I remember when we came into here, we came into this imbalance. We came 25% into that tested zone. We then rocketed up to the upside. Now, the bigger picture, looking at the higher time frames, give me 1 second here. On your daily, we got our short setup yesterday. We came up into the short trigger that I gave you on Sunday. This worked out really well. It pulled back. It came down to the trendy monthly edge. We took in the SPX room, we took some calls here, and that actually those went up quite a bit. I sold mine at 50%, I think, but I think you got almost 100%, if not more, on those trades if you held. That's up to you again. And my biggest thing is out on my social media. I pushed out something and I wanted to read it to you about today. Let me see if I can find it real quick. There we go. All right. So right in here, I'll just read it to you guys. This is all played out. This is the same 4 hour that I pushed on the broad market analysis. I was looking for the bearish ACDC. So this blue line annotates that, and then we got our bounce. Okay, then we bounced up, and then we broke back down. Okay, and the big thing here is this is played out. The market has now created panic, right? A little bit of fear, I should say. Bears, the 90% are focused on the low that happened, okay, which is right there, guys. You can see it. So the 90% or more are focused on the prior low, right? Which is okay. I'm not like making fun or anything. I'm saying that everyone's focused here because I've always said that this creates PTSD. It really does. You remember how this felt? It was pretty ugly. It's like, oh my God, man, here we are again, right? And we don't like the way that feels. The majority of people don't like the way that feels who has a 401 or you have long term portfolios. Yes, we invite it in this room. We want to buy lower because we want discounted prices. But the majority of the market understands that this is fear down here. Okay. Now, what I think your focus needs to be is 88.7% of that low, which is around 72.75. That's my main concern because the probability suggests that if we break down below that 72.75, that we have a 95% chance that we'll make new lows. Okay. Everybody got that? So create an alert and know if that happens, that most likely we will make a new low on the week. Okay. Bulls, we must get above, I would say above 7,400. It's actually a little bit lower than that. If we go back over here, it's about 74.88. Well, that's the 618, sorry. But the 73.95, or it continues to be a sell any momentum. And what I'm doing there is if we take the high, and I think the number is actually a little bit lower. If we take the high and we take the low and we look at the bear channel, all I'm saying is that it continues to be a sell the rip. And I hate to say rip because it's not like we're ripping to the upside, but sell any sort of bounce that comes up into this area. Okay. Now, for this entire trend to be broken and for me to be convicted that bulls are actually doing something meaningful here, that's where we use the golden Fibonacci level, which is the 618. Okay. So we must get above the 618 and hold above there. We might as well round up, and we're going to call that the 7,500. So this is a down move until we hit a higher time frame demand zone or we get above the 7,500. Okay. So those are our major levels. Now the concentration becomes the PMZ. We understand where our major levels are, but do we know how to trade the PMZ, right? So on the ES futures, if we come over into a 5-minute chart, okay, there we go. we're going to notice that the PMZ high and the PMZ low are right here. I don't know if this is accurate, if I could get some confirmation from everybody. I have a couple different test things, that I always have, but I think it's showing that our risk right now on the PMZ is at or around 12. Is this accurate for everybody? Does this sound like, does that sound right? Okay, cool. So everybody's in agreement that that's a wide one, man. All right.
It's
So,
big
hey,
risk,
Mel, what's up, girl?
big old risk today.
Yeah,
12
it's a
points. Guess
big
what the
risk.
Nasdaq is?
Uh-oh.
76.
Oh my gosh. And so, yeah. So what does that mean for today? Well, one thing that I noticed is on this beta indicator that we're using, I think, let me just see. Yeah, these are actually a little skinnier, right? So each one of these really represents a PMZ. And that's what I'm trying to say is like they're just zones, they're just rectangles. And if the PMZ is 12 points wide and you guys are looking at me or Mel's thing and we have, these on here, these are a lot less risk. So you can still look for your confirmation process at a zone, right? You can still be aggressive if that's your flavor, right? If price, let's just say we get a sell off like yesterday in the morning and we come all the way down here. And I know we have several people making money using these things already, but I can look at what my risk is here. And if it's tight enough, I can just put on a set and forget trade. I can just lock it in, boom, take the trade. And if we get the move, I make money to the upside. If we don't, I take a loss. Okay. The PMZ, it's good that it's wide this morning, guys. I want to go ahead and talk about it. Let me see what edit studies. Give me a second here. I'm on a 4 hour. Let's see, what have we done? Let me look at this thing. Come over here. That was at 2 o'clock in the morning. Okay. I'm just going to go to the daily just for a second. So this is going to give me the daily zones. There we go. So it looks like we're coming up into the golden pocket here, up into this area. And so I know that we're opening up towards a little bit of resistance, okay? I just want to take a look at that real fast. Now, I want to go over the PMZ with you. I gave you the major levels, right? And the thing is, to give you some background, is that if I know where my major levels are, I think where the interest comes in is, well, what I think is difficult about supply and demand trading, and I've thought this from the get-go, is that the patience part is hard. It's like, okay, John, I'm really locked in on this name, but I noticed that your demand zone is way down here, but price is, it's up here. It's doing its thing or whatever. And then I might have given you a supply zone that's way up here, right? And you're stuck in the middle and you're told, by so many people, including Mel and I, don't diddle in the middle. Speculation leads to losses and all that fun stuff, right? But that doesn't mean that we still can't trade. But in the beginning, it meant that I couldn't trade because honestly, I didn't have a process. And then I developed the PMZ. The pre-market zone is going to pop up on your screen wherever it wants to pop up. To Today, it's actually pretty wide. So we're going to make this thing kind of wide. We're going to say, hey, at the moment, the risk right now is actually coming in at 12 points, okay, of risk. All right, so let's just write that in there. Now, nothing changes on the way that you trade this PMZ. If you're like, hey, man, it's wide, I'm still going to trade it just like you would a 5-point PMZ, okay? We will not make our PMZ. So I have like a developer PMZ, and I've told you guys before, if it's below 5, it's always 5. Okay. But what you might not know, because I've only said it a couple times, because it only happens every once in a while, is if it's over 8, it always stays 8. Okay. So I'm not willing to take 12 points of risk from a SPX perspective. All right. So I always make it 8 in my head, like that's my risk. Okay. But I want to go over this with you and I want to tell you how you trade this. Okay. It's no different, but I have to remind you every single morning. You have two different ways to trade today's wide PMZ. As soon as it breaks, you can go long. Okay. It's aggressive. Remember, I've always told you if it's over 5, I don't like to be aggressive. I might have fibbed a little bit. It depends on what side of the bed I wake up on, to be very honest with you. If I'm in an aggressive mood, I'm going to be aggressive. And it kind of like varies, right? So, like, I'm coming in this morning. Let me look at my account. I've already taken a NASDAQ trade. I made some money. So, like, am I sitting on wins? Am I sitting on losses? And I'm trying to be as transparent with you as I can be. If I'm sitting on wins, I feel a little bit better, right? You guys start to get a little bit of confidence when you're making money. I would hope so, right? You're like, hell yeah, man. So if I'm in that mode, I will be aggressive regardless of the risk. And let me just kind of go over what that looks like. Yes, it's 12 points of risk, but as soon as this thing takes off, and if it goes in my direction, let's say that it pops 5 points. This idea of having the stop under here for 12 points is now going to come up immediately underneath the PMZ. That's going to make sure that I'm not going to take 12 points of risk. Okay. Everybody understand that? So I'm aggressive immediately. It pops, and I'm going to bring this bad boy up because I've already gotten the initial move that I wanted to get out of the PMZ, and I want to make sure that I lock in my points. All right. On a micro side, remember, sometimes I wake up and I'm like, you know what? Maybe I want to take the boat out this morning, go watch some dolphins. I'm being serious. I always feel like I'm like making stuff up with you guys, but that's really how it is. It's like, do we want to go on a dolphin cruise this morning? So, what I would do is maybe trade a micro and just go, hey, I'm okay if I lose 12 points and I leave and I go do whatever I'm going to do. Okay. Either way, if you're in front of the market and you do an aggressive approach and you do get the initial move that you wanted, just bring your stop up immediately so that you don't take a 12-point stop. Okay. And then what you can do is if it keeps on moving up like yesterday's opening, right? That's where I did really well on SPX calls, just boom, took the calls. And then we got, a very aggressive move out of the PMZ first thing in the morning. Then you just trail stop. And that's what I did. Once I got to 100%, I did a dollar trail stop. Okay. Conservative. Okay. Conservative on a trade like this, what I would say is it's aggressive no matter how you trade it today because it's 12 points wide. Does that make sense? So conservative, we're going to wait for it to close and then we're going to wait for it to come back. Now, the reason why I'm saying it's still aggressive today is because to me, it's aggressive trade to take on a pullback because it's so wide between here. All right. So it's aggressive, right? One thing you could do is if it starts to break down, okay, listen closely. If it starts to break down and it keeps coming down, we're actually going to get interested to get long as price gets lower on the curve. Okay. So remember, I know this is it's quite interesting, but I'm sure you've heard Melissa talk about this and myself. But a lot of times what happens at the bottom of the PMZ, it actually acts as support. And then you can get a move like this, especially in wide zones. And if you're in the PMZ and we get towards the top of the PMZ, it acts as resistance and you can actually look to go short here. So when things are super wide, you can take advantage of them. They're almost like liquidity chop lines, if you will, the top and the bottom of the PMZ. Okay. Conservative on the downside, again, if you wait for this to close and then you wait for prices to come back, this is still aggressive, guys, because of the overall risk is 12 points. But let's go over it anyway so that you understand. It's a wide PMZ. It breaks down. You wait for it to close. Aggressive traders are like, hooray, I took it aggressive. I made money already. Maybe they did the same thing I taught you up here. You go aggressive here, stops are here. As soon as you start making money, you're going to bring that stop to the downside. Conservative, you're going to wait for it to close. Then you're going to wait for prices to pick up and move back towards this bottom of the PMZ. If you choose to take the trade right before it hits or right as it touches, this is called aggressive. In your mind, what you're looking for is a pullback immediately from this level. Okay. On a conservative side, okay, you're going to wait for the candle to close. Give me 1 second, guys. Give me 1 second. Sorry, guys. We had one of the dogs was out and our tree trimmer's back for the third day. It's been hot out there, so he's had to take some breaks. But this would be aggressive because you're taking it immediately when it gets real close or it touches. Okay. Conservative. Okay. Watch this again. Wait for it to close. Wait for price to come back, and you're going to wait for the 5 minute to close. Okay. Let's say that the 5 minute closes inside the PMZ. All right. What this does is when you wait for it to close, especially on a wide day, is it becomes a neutral setup. Okay. So what I mean by neutral, now it's closed and I'm going to a 1 minute chart, and these little 1 minutes can either go up and break. And if I get a close above on the 1 minute, I'm going long. I'm neutral. On a neutral side to the downside, let's say now we go to the 1 minutes, 1 minute, 2 minute, it closes on the 2 minute, I'm going short. Okay. Again, your stops are still 12 points, but as soon as you start making money in the hypothetical event that you're making money, you're going to pull the stop down quickly because you really don't want to take that 12-point loss. Okay. Hopefully, I've explained that really well to you. The next thing that I want you to understand is this: it's wide. Before you cross the street to the upside, or before you cross the street to the downside, I need you to check both ways. What do I mean by that? I want you to look all around in your surroundings and make sure that there's nothing hanging out, like trendy edges. Lying in the sands could be right here. Okay. The reason why I say that is because this is a 12-point risk. And if these lines or edges are close in proximity to the PMZ, you're going to have to ask yourself the $1,000,000 question: are you feeling lucky today? Just kidding. Is the risk to reward making sense for you? In this event, it'd be 12 points of risk. Let's say you only got 3 points until you hit a line in the sand. It may not be your day. Okay. Okay. So the PMZ's wide and everybody's like, man, I'm looking at my surroundings. I'm scared, right? I just don't want to do anything. Okay. Did you know that everything that Mel and I teach you is fractal? You could come down into a 15-minute chart on the ES futures and we could assess, do we have some pivots in here? Okay. So for example, I'm going to take on this default, I'm going to take some lines off here. I'm going to show you real quick. Okay. We start the process over. It is a 15-minute chart, but the candles are a little bit bigger, right? And I can tell immediately if I go down under candles and I look for the inside and up formation, I got one right there. Everybody see that? So I have a zone or a pivot that's about right there. My purple is right there as well. So it's pretty close. All right. Now I can go ahead and place a line there. That is your 15-minute inside and up formation. This is a level that I would be looking for buyers to come in. Notice that we came close to the golden pocket. I already told you that this is resistance, that we are opening up into resistance. So once again, you already know that this is resistance, okay? If we zoom in, you're going to notice we have an inside and down formation right there. This would be the reason why this happened. Hey, Ash. Sorry about that. She was letting the other dog out. I just had to let her know. All right. So we have pivots. All right. And you can trade pivots, guys. And you can trade pivots. Check this out. Listen to me. Pivots, lines, line in the sand. I don't care what you have on your chart. This strategy can actually work if the lines that you're using on your chart work well. I would do this to a quant pivot. I would do this to any level. Okay. And I've been doing it like that for, man, since I came here. I remember I had quant pivots on my chart when I first came here. I was like, oh man, these are cool for targets and stuff like that. And I still think that. But you can trade those lines the same way. You have the ability when price comes down, let me show you what I mean. Okay. When price comes down into this line right here, I have two different ways that I can go ahead and take this trade. Okay. All right. So here I can take it aggressive. Soon as it touches, I'm looking for a bounce. Okay. Or I can be conservative, wait for price to come down. Okay. It hit the level. That's let's say that is the first step. Okay. Check mark. Okay. The second step, let's go to Mel's confirmation process if you like. Okay. You wait for this candle to close. You wait for the next candle. Did it make a higher low? Wait for it to close. 2, check mark. Next candle opens, doesn't make a new low, goes over the body. I'm going to go long. 3. Everything checked off, we're going long. Okay. Again, what is your risk here? If it falls within your risk tolerance, you can be aggressive, in my opinion. Okay. Every line on the chart, every zone on the chart can be traded the same way. It's all fractal. All right. Now we are simply talking about 15-minute pivots, 5-minute levels, whatever, right? Lower time frames. My whole message that I read you this morning and that I talked about in my alert that I sent out last night is this is where things change. Everything I just went over on these little lines right here are looking at a 15-minute chart. Respect that. It's a 15-minute. You shouldn't be waiting 4 hours to see if this line worked. If you're waiting 4 hours to see if this line works and 4 hours we're 200 points down, guess what? You had a bad day. I've been there before. Okay. Now, let's go a little bit higher time frame. This is a monthly edge. Yesterday, when price came into this area, SPX room, I took a Friday expiration and somebody said, is this a lotto? Not a lotto, it's a level, but we went way out of the money. And the reason why I did that is because I'm using the market to my advantage. Now, you can look at it two different ways. You could say, well, it's a disadvantage if everything slows down, the premium gets sucked out. And I explained that to everybody. I think everybody in here has been around, most of you, I would say 99% of you have been around long enough to know that when implied volatility is high, if you buy it and things slow down, you get screwed. The premium comes out of the option, you lose value. It doesn't work out well for you. Okay. However, I took advantage of the situation because as soon as we bought it, we were still in the middle of the hurricane. The volatility wasn't going to slip out in 10 minutes. Okay. I knew that. The market came down fast and furious and it wasn't going anywhere. meaning that fear was palatable. It's not going anywhere. That implied vol is going to stay jacked up. So we took advantage of it. We didn't need the move to go to where we needed it to go. We just needed this line right here to work out. Now, this line is a monthly edge. And to give it the respect that it deserves, we do not make decisions off of this line using a 5-minute chart. Can you scalp that level on a 5-minute? Yes. Are you giving it the respect it deserves? No. It is a monthly edge, folks. It deserves a lot more of your time and patience. Okay. You have to wait for bigger candles to make their decision if they're going to hold. For example, this 4-hour came into it. We're going to wait for it to close. Notice it closed above it. That's a bonus. Your next candle actually stays above it. So far, the monthly edge, which is actually a zone, it's a lot wider than it looks, is holding. Please, as a reminder for anybody that's new in here, understand that the trendy edge is not just a line, it's an actual zone. If you want to turn on the zone, then I recommend that you right click on this thing. You come up here and you say show cloud. You hit apply. Okay. Gonna wait. And this is the actual zone, guys. This, just because it breaks down below this, does not mean that we get out of the trade. The actual zone is this wide, and it happens to fall within the tested zone that worked for us back in May. Okay. All right. Notice these zones right here. Okay. We're testing from underneath. What was supposed to be support has now turned into resistance. It's not until we can hold above here that you're kind of out of that. Remember 7,400 that I mentioned earlier. It's not until we get above that that things look better. Okay. All right. So I believe that I went over the PMZ, our lines, and our levels very clearly here. Okay. It has never changed. That's what I love about the trendy process. And I will stick with that till the day that I die. Okay. In my opinion, it's the best process ever. All right. It just takes time as a trader to build, up your confidence and maturity and stuff like that. It really does. It just takes time, folks. It's us, I promise you. It's us most of the time that gets in our own way. All right. All right. So again, to go over this, I got some levels here. On here, this is Mel's process of confirmation. It is random, meaning it's not waiting for zones to tell me whether to go long or short. It's just an open sesame. It's open game, baby. If you like the risk, take the trade. That's how I look at it. Okay. Over here on the NASDAQ, again, using the dailies at the moment, buyers, resistance, sellers. Okay. Resistance, but I have a random signal here. That means I could still take it regardless of the resistance. We have analysis paralysis. And by the looks of it, some people have like so many indicators, man, the decision making has to be difficult, right? The less indicators that we have sometimes, the better off we are sometimes, right? I think for a lot of people. I love my indicators because they don't move, they are stationary. Okay. I love this indicator that we're building because I can read my risk. And I have to tell you guys, ever since I was like just a little kid in school, I never learned well. I really didn't like just listening to people. I think about a million things in my brain constantly, and I'm still like that. So if you're trying to teach me something, even at my age of 50, I need to see things. I need you to draw them. I need you to point. I need to understand my risk. I need to understand my exact number for entry. all of these things are really important to me, okay? And that's why I'm putting all of this together because as I continue doing this, I'm trying to make the process even easier. Automation. Price comes down. I know what to do here. If you want to be confirmed, right? You're going to look for that. All right. So pretty good stuff. Let's talk about bracket trades if we want. Okay. So oil, I've already flattened my oil, guys. I almost went short when we got the pop again. I took my money yesterday. That was a nice trade. I've done really well on oil and micro oil this year. And I feel like I've owned that mofo. So very happy with my trading in futures overall, but especially just shorting oil makes me feel so good. So it does. Is that dirty? I feel like it's dirty, but I like shorting oil. So let's talk about bracket trades. All right. Remember bracket trades. Let's go up here. I'm going to use this blue level and 74.60 by 89. That's 30 points wide. If I wanted to short something, I could come up here and short that blue level. Let's say I want to short the golden pocket today. All I have to do is come in here and set up my template. And we're going to pick, let's just do 5 by 30. All right. And 74.38. Okay. So I'm going to come over here like this. And this is what you do on set and forget trades. Okay. I'm going to go up to 74. I'd be shocked if we get over 7,400, but usually when I say I'm going to get shocked, I get shocked. But I'm going to come up to the 37 and a half level, 34, 30, sorry, 74, 37 and a half, which is right there. And I'm going to go ahead and hit sell. And that's going to put my bracket order in. And you can notice that it's going to be here on the MES. These are called set and forget trades. Okay. If I wanted to go long, I can come down here and I could get long in this level if I'm okay with the risk. Okay. So basically, you can set up all your bracket trades in advance before the market even gets there. And you can also do this in the SPX room. You can do this with options in the SPX. You could do that with SPY options. You can, with equity, all that good stuff. So everything's already in place to get our trades going before the market opens. And I have to tell you, that's my favorite thing about supply and demand is that anything that we use, we can put trades in advance and go do something else besides look at the screens. I love looking at screens. So I feel like when I say that, sometimes you guys think that like I don't like trading or something, but I love looking at the screens as well. But I also love being in the sunshine. Okay. Here is Vincent's screen that I shared in the trendy room. I have the link up and you can use this stuff, but we can, watch. I'll tell you the one mistake that I made yesterday. We timed the dip on NVIDIA perfectly, and we actually, I think, went green for a moment, which was amazing. But I meant to sell calls against it, and I never did. So I just wanted to be clear. If we pop back up towards, say, like 208 to 209, then I'm going to sell some Delta 30s, 35s, at least, I don't know, 20 plus to 30 days out. Okay, just like we've been doing in the room. All right. Other than that, looking across the board, I think our watch list pretty much tells us that, the market's not doing that great this morning. I think, like I said, we've created some fear in the market, and I think people are going to be concentrating on the prior lows. I would concentrate on those levels I gave you, and I would set your stop. Sorry, I would set up your alerts for today and make sure that you have those placed on your charts. Like, so for me, let's go over here real quick. For me, I have, I'm going to change this around, this liquidity chop. We're just going to move it up to my first level here. Okay, I'm going to take that line off. It's going to put us at 66. I'm going to measure from this wick low here to my other, where I'm projecting price to go. And I'm going to bring this up to the 50. So right underneath that big candle. And man, we've had some spot on liquidity chops, don't we? So we're going to keep these right here and just explain this real quick. What time is it? 8:19. I'm going to jump off in like 2 minutes, guys. Um, explain this real quick. Big money comes in, and they can pretty much manipulate the market, take a lot of liquidity in the mornings. Jim Cramer talked about this many, many years ago when he used to work for Goldman Sachs, how they can manipulate the futures market. And you just need, so many millions of dollars in your account. And really, the best way for me to explain this is I try to think like Jim Cramer and pretend like I have millions and millions of dollars that I can trade with. And I try to find the levels where the typical me or the typical retail trader would put their stops in the market. And for me, the big money coming in and taking their money, the idea is that they're going to push price between these levels and take these people's stops, and they are going to liquidate people. You probably heard the word liquidity grab. So they're grabbing liquidity from people and they're building up their accounts, right? Basically. And once everybody gets kind of worn out and retail traders are like, oh my God, man, this is so choppy, then you will see the move come. It will either be a big imbalance or just like a nice grind to the upside, or we'll get that continuation to the downside again, big move down or just continuation down. So again, this is where I'm projecting that they will take liquidity from people. And just to go over that one more time, what I've done here is I've come up close to the daily mid, close to this 4-hour cloud, and down here where we have a liquidity grab, and you can tell by the wick itself that it took liquidity and it created what I would say is support. So anybody going long here probably has their stops under this level. And if I were to come down and liquidate them, I'm going to take their stops and then I'm going to move price right back up. And for people that are short, they're probably, in the same area as me and they probably have their stops. And if I want to liquidate them, I will simply push price up into this area with several $1,000,000. I take their stops, and then as soon as I take their stops, I'm going to break it right back down. So again, this is the area where we're walking down the street and we're taking money from people. Okay. So in order for me to have an edge on the market, I need to think like the bigger money. How do I take your money? And remember, guys, that's what we're doing in this market. We're actually taking other people's money from them. Okay. But if we're thinking like 90% of people, are you taking their money or are they taking, or is the big money taking your money? I would have to say if you're doing things like the 90% of other traders, you're using the same indicators as 90% of the people. And I'm talking about 90% of the people in the market. Okay. Not in simpler. And you're doing the same things, well, it's easy for the market to know what your next move is. But if you're playing along with the smaller percentage of people, it's not easy. You're thinking differently now. You're doing things differently now. Actually gets really, really interesting. Okay. So I hope all of that has helped you out today. We're going to sit back. We're going to get started here shortly. I'm going to get some coffee. Mel and I will run you through the first hour of the market. And then after that, that's it. Hopefully we'll do really well on our opening ranges. And Mel has the SPX for you guys for your charts, your levels. And so I'm ready to rock and roll. I'll see you guys here shortly.